Hey traders and investors, Serge Berger here. I want to get right to the point here. Over the past couple of weeks, as a lot of traders on Wall Street have been at the beach and on vacation, we've had a small to potentially medium-sized warning signal flash. In fact, two signals to be specific that do have smart money people sit up and take notice. A lot of people I've been speaking to for the past couple of weeks are noticing this in the hedge fund and institutional community. So I would like to show you guys quickly what's going on. What I like to do is I like to measure what's going on in different asset classes and different sectors of different stock markets and how things are moving from near-term bullish to near-term bearish and vice versa, and the same thing in the medium and the long-term time frames. And what we've noticed, while the broader indices like the headline indices like the S&P 500 continues to push higher, and while the VIX does remain very low, we actually reached an all-time low just a week and a half or something like that ago, peaked, actually pushed below 9. And that was a good opportunity to buy some protection, by the way. But we've noticed below the surface is a couple things. If you look at the scanner up here, which is a proprietary scanner that I do actually, people can purchase it. But what happens is you've got a near-term scanner here, a near-term bullish, near-term bearish. Okay, these top two scanners are near-term bullish, near-term bearish, and then below you've got medium-term bullish, bearish, and the same thing for the long-term if we were to go down. But I want you to focus on something. I'm going to show you guys the changes that happened over the past couple of weeks. Well, first of all, here's the scanner result from July 27th, and you can see the IYT, which is the transportation stocks, had just showed up. In fact, they showed up a few days prior on July 18th. Okay, so if you look at this on the IWM, IYT, which represents transportation stocks, on July 18th, this scanner, the transportation stocks moved from near-term bullish to near-term bearish. That's on this day here, okay, on the 18th of July. Since then, the transports have dropped about 5.5%. So this is a very nice algorithm we've got here, a scanner to scan the market. Now watch this. Now what happens, here's a scanner on the 27th, okay, and here's a scanner on the 29th. And notice the difference. What started to show up here on the 29th is the industrial stocks as well, started turning near-term bearish, okay? And also, if we go to another scan, like for example, a scan of August, I believe it's the August the 1st, what you'll note is that what disappeared off the scan on August 1st is the small cap stocks. The IWM is no longer on this list. It's turned near-term neutral, no longer near-term bearish. So the takeaway here is that the Russell 3000, the small cap stocks, and particularly transports, although industrial as well, are turning to the downside in the near term. Okay, so what this is showing to me, particularly transports and small caps, which do have leading indicator characteristics, it does start to show a little bit of nervousness again, and people are noticing it. Now again, intermediate term and long term, all the things I just mentioned remain bullish. So it's just a near-term change for now. But if you take what the smart algorithm scanner is telling us, and you combine that with the fact that August can be a challenging month for stocks. Doesn't have to be a horrible month, but it can be either very boring, but if it's not boring, we tend to see fairly explosive moves in volatility. And even if we don't see it in August, we do tend to see a volatility spike at some point in the September to October period. So for what it's worth, we've been very cautious with Clubhouse members. We've been made sure we stay out of transportation stocks, out of small caps. We've been warned ahead of time. We've avoided a 5% drawdown in transports. It's a very, very powerful thing. So we're taking a bit of a cautionary note. So what we have done in the Clubhouse, and for the most part, is a little bit less. Less is more in the month of August, but we're also looking at buying a little bit of volatility, be buying some straddles on the S&P, on the SPY, and we are legging into a little bit of other bearish positions in small size because it is early on in the month, and we don't want to get overexcited because we're only near-term bearish right now. But we are looking at potentially putting in something on the bearish side with technology stocks. So there you have it. That's how we measure things moving from near-term bullish to near-term bearish and vice versa. Same thing in the medium term. I hope this makes sense, guys, and I'll see you in the next video. Also, please make sure to join us in Chicago. We are having our 2 Comma Trader Summit September 24th to the 26th. If you click or look down below in the comment section of the video, there are 2 links. Number 1, there's a link to read about the summit, again, September 24th, 26th, and a second link to sign up for the early bird tickets. The early bird tickets are available right now. The first 50 tickets are going to be early bird prices. After that, the price is going to increase. So make sure if you want to join us in Chicago, it's a one-of-a-kind event. I promise you this is going to be really, really awesome and fun from a networking and from a learning perspective, of course. We can do some fun activities as well. Make sure to check it out and also make sure you get an early bird ticket. Hope to see you guys in Chicago.